Global financial markets showed a mixed yet dynamic performance across the major indices and commodities, reflecting the diverging investor sentiment and the sector-specific trends. In the United States, the Dow Jones Industrial Average saw a strong gain of the 400.17 points or 0.91%, closing at 44,494.94, signaling the investor confidence in the large cap industrial and the financial stocks. Similarly, the Russell 2000, which tracks the small cap stocks, advanced by the 22.50 points, that is 1.03%, indicating the renewed interest in the domestically focused companies. However, the broader market showed signs of hesitation. The S&P 500 fell marginally by the 6.94%, that is 0.11%, and the Nasdaq, heavily weighed with the tech stocks, also experiencing a significant drop of the 166.84 points, that is 0.82% decline, also suggesting a possible pullback in the technology share or the rotation towards the value sectors. The VIX, a key measure of the market volatility, often dubbed the fear index, rose slightly by 0.10 points, that is 0.60%, to reach 16.83, reflecting the cautious yet overly fearful investor mode. Also, the North American markets outside the United States also posted the positive movements. In the Canada, the S&P TSX Composite Index climbed up 164.79 points, that is 0.62%, to settle at 26,857.11, while the S&P TSX 60, which focuses on the large cap Canadian stocks, rose 8.67 points, that is 0.55%, to reach 1598.53. Also, the indicator of the broad-based recovery actors have also said that the energy sector, the finance sector, and the resources sector, the Latin America, the Brazil, the Bovespa index, and that also jumping to the strong 694.83 points, that is a 0.50%, buoyed perhaps by optimism in the commodities and the domestic economic indicators. The Mexico's S&P, BMV, and the IPC index followed the suit, adding the 362.94 points, that is 0.63%, while the Child's S&P IPSA bucked the trend, falling 35.74 points, that is 0.43%, possibly weighed down by the political or the sector-specific concerns. In the commodity space, the energy prices remained largely stable with the modest gains. The WTI crude oil rose by $0.08 to $65.53, while the Brent crude oil inched up $0.04 to reach $65.28, suggesting the steady demand despite the global economic uncertainties. The natural gas remained virtually unchanged, also gaining more than $3.44, indicating the subdued volatility in the short term. The precious metal, however, experienced selling pressure. Gold fell by the $9.80, that is 0.29%, to reaching the $3,340, and the silver dropped by $0.18%, that is a decline of 0.49%, to reach $36.22, likely due to the easing safe haven demand amid a risk-on environment in the equities. The agricultural commodities also showed mild weaknesses, with the soybean slipping by $0.01% to reach $10.26%, staying within the lower half of their 52-week range. Also, overall, the global financial landscape is currently shaped by a contrast between the rising equity optimism in the specific regions and the sectors, and the cautious movement in the commodity, especially the metals, suggesting a complex interplay of the risk appetite, the inflation concern, and the economic outlooks.